Welcome to the Weekly Juice Podcast, where we discuss all things real estate, personal finance, investing, entrepreneurship, and the many ways to achieve financial independence. We interview accomplished investors and entrepreneurs with the goal that their stories inspire you to take control of your financial future. Here to get your creative juices flowing, while also documenting their own personal investing journeys, are your hosts, Corey Jacobson and Ryan Bevilacqua.
Welcome back to the Weekly Juice. As always, Ryan and Corey here with another episode. Today we have a very fun episode, actually. We are bringing on Michael Strasser and Matthew Weber from Alpha Funding. They are a hard money lending company out of New Jersey. They lend in 48 states. The main reason we brought them on was to share their extensive knowledge in the hard money or the lending space. They have a wide array of contacts and resources for us that they've shared. And we wanted to bring these guys to you. We actually partnered up with them. So we found that certain loan products are hard to come by, and certain deals require certain types of or certain steps to go through in order to get funding. So these two gentlemen have been helping us with a number of properties, and then also we've referred them to friends, and we decided to come up and join forces here to basically bring their services to you guys and bring our relationships outward. So Matthew and Michael today are walking through the education piece on, like I said, hard money lending. They're going to walk you through all the loan packages that they have, but this is more geared towards the investor, right? Someone that maybe wants to do new construction, someone that's doing fix and flips and cash out refis. There's like, if these are ringing in your head right now, you're an investor, you understand this, or you're an aspiring one. And we wanted to connect you with these two gentlemen as they've helped us, and they've been amazing. And they're relationship guys. That's the main thing. It's more so we didn't feel like when we first went to them that we were talking to a brick wall, or they were just like immediately no. They're like, okay, what's your situation? Are we the right fit now? If not, let's continue this relationship. We'll be a fit in the future. And they hooked us up with a title company for certain things, other agents. They have just a wide range of resources, and they've just been awesome. So, yeah.
Yeah, that was, first of all, you said so many things. I don't even know if I can add to that. But I think the first half of this episode is very educational. Like, what are the products that they offer? How can they help you? What have they helped us with? And that's one of the biggest reasons why we decided to partner with them, is because they are really out there to try to educate their investors, the people that they're working with, on what is the best fit of a loan product for you specifically, your specific scenario. They've had a number of situations where they've worked with the same investor for 5 years, 10 years. I think they've been in business for about 15. We're going to let them tell their story, but we wanted to bring them on to introduce them as partners of ours and help them show you how you could scale your real estate portfolio. I think some of their products are incredible, and that's why we're doing the episode.
Sure, and you'll notice these products are a little bit different than residential lending that you'll get, and that's kind of just the different side of the coin that we wanted to show. So we are working on our website right now, and I'm mentioning this in this episode, and Corey and I are, and there'll be an invest tab where you can go through and you'll click on the partnerships to basically see. The goal is to have a residential arm, and then also have a, I guess if you want a commercial arm. And right now at the moment, we do not have that finalized. So we're going to funnel people through Alpha Funding's website. Basically, we want them to know that you guys that whoever's coming to them from us is well taken care of. So when you go through the process, you're going to see all the different, you'll go to alphafunding.com, and then you'll see all the different types of loan products they have. When you click apply now, it's going to go down, you're going to see a drop down, and it's going to say, where did you hear about us? And you click under an employee referral. So you'll see employee referral, there's another drop down, and it'll be a blank box. All you type in is the Weekly Juice Podcast. They know Ryan and Corey sent you their way. And then it's like, okay, boom. You probably will, instead of getting sent directly to a lending officer, you might speak with Matt directly, which is awesome because he sees that and he's like, all right, these are my guys. Take care of them. We're very reciprocal relationship in that way. It's like anyone he sends us, we're locked in because we know that they're going to be treated with care, and that's big for us. Our relationship guys, as we mentioned a million times, connections are huge, and it helps to know people in the right spots, and they'll help uplift you. So if you need lending and you enjoy the episode, I know it's going to be a lot of education in the beginning. Definitely reach out to these guys and they'll help you. If you want the handoff from hey,
happy to do it.
We'll just send you an email and we'll introduce you directly to Matt. That's no problem at all. probably for you seasoned investors, this will make sense. You probably already have a Rolodex of lenders that you have, and you're always looking for, hey, does this one have a more competitive rate? What's going on in the market today? These guys are great. Also, they have a good social media. It's alpha.funding on Instagram. You can check them out. And they just started a podcast too, the Matt and Mike Show, I believe, and they're getting their training wheels on for the podcast like we did in the beginning. But awesome dudes, as I mentioned, out of New Jersey. They lend in 48 states, have a lot of packages, and we want to bring them in to, I guess, educate us on the whole process here.
Let's do it. Let's bring in Matt and Mike.
Mike and Matt, officially welcome to the Weekly Juice Podcast. Corey and I are so excited to have you on the show. We are more excited to officially announce our partnership with you guys. So for those who don't know, Matt and Michael are partners and owners of Alpha Funding, which is a hard money lending company out in Jersey. And we are going to be partnering with them to help all of our investor friends out there that are looking for specific loan packages. So today's episode, we're going to take you guys through all the different types of packages available, do a little education on lending, and then give you the story behind Alpha Funding. These guys are the best in the biz at what they do, or at least in our network. So we're excited to bring the partnership to the forefront and have you guys work with some of our friends. So Mike and Matt, officially welcome to the show.
Hey guys, thanks
for having us.
Absolutely.
Great.
So let's start here. Let's take us through the inception of Alpha Funding. I think, Mike, if we can go to you, how did this come to be, and how the heck did you get this started?
Ooh, sure. So, I mean, Alpha Funding goes back beyond me or Matt. So Alpha was founded in 2007 by our other two partners, Mark and David. Basically, it just came out of a necessity of a product that just didn't exist back then. So, you know, I think a lot of people today, they see what we do, they see all the flipping shows, all the stuff, and they go, oh, this stuff must have been around forever. But hard money like it is today, it didn't exist back then. So basically what happened was Mark Colazzo, one of our partners, he had some money, and some people kept coming to him and saying, hey, can I borrow some money to fix a house? And he was doing it, but he only had so much money. And he met up with Dave, and they were fixing a house, and he said, hey, I think I can raise some money and we can make a business out of this. And they did. And that was back in 2007. So I joined, if you can imagine, 6 years later. I joined in 2013. So they launched this company at the beginning of the mortgage crisis. They ride through the mortgage crisis with great business. And I come on in 2013. And this is actually my 10th year at Alpha. But, I think businesses like this, they start out of necessity. I think all interesting businesses do. And that's what this was. There wasn't a kind of institutionalized or put together lending platform for these kinds of things. And it grew from a grassroots kind of need. And now we lend in 45 states across the country. From when we started, it was just like a little central New Jersey lending company, right? So that, without going crazy, that's really the basis of how Alpha started.
I would love to hear from both of you how you guys parlayed your personal stories into Alpha. Like, how did you join? You said you weren't there at the inception. Like, does a real estate background, how does that lead into Alpha? And then we can kind of talk about moving forward into Alpha and the products and everything that you offer.
Yeah. Mike, I guess because you came on naturally, you should cut at it when you came on board, and then on second, I can piggyback and when I popped in.
Sure. Before I came to Alpha, I had very little real estate knowledge. So at one point I was a paralegal. I worked at a law firm that did real estate closings. That's great. But I've lived like 10 different lives before I got to Alpha. I worked in radio, I worked in television, I worked in legal. I've done all different kinds of things. Basically, I had known one of the partners, Dave Hansel. He's been my friend now since I was like 15. So when I met him and I came out to Alpha, we'd been friends for almost 15 years. I had just left my television gig that I was working on, and I went and I traveled for a bit. And he had bumped into my brother, and they'd asked him, hey, how's your brother doing? And he said, oh, he left his job. And he must have blew up my phone like 12 different times. And I was traveling abroad, so I didn't get my voicemails. And I remember what he said to me. He's like, I need you to come work here. I don't know what you're going to do, but I need you to come work here. And crazy enough, again, that was a decade ago, and now I get to run Alpha Funding, which is amazing. But I love that my story, and I love Matt's story too, because it just shows that like real estate is the ultimate equalizer in what you're doing, because you don't need to have any background to come in, figure it out, and do it, right? You don't need an economics degree. You don't need anything special other than wanting to learn about what it does and be able to go in there and just go do it. So look, I came from very, very different backgrounds, and now I run a finance company that lends to real estate professionals. So, that's kind of the crazy way of kind of parlaying into it.
Love it. How about you, Matt?
Yeah. So a couple of years after Mike came on board, I was personal training at the time. So I went to school for exercise physiology. I had a biology degree that I got, and I was in personal training. I loved working with people, loved coaching. Fitness was my passion, and just helping people be the best version of themselves. I need a guy that just would constantly bicker at me in the morning. He would always be busting my chops in the mornings at the gym. And he finally, we ended up becoming friends just because the conversation eventually became friendship. I think he grew respect for me, that I could take his him busting my chops every day. And then he told me that, he's like, Matt, he goes, I know this guy who runs this is David at the time. I know this guy that runs this lending company, and I had no idea real estate, finance, any of it. But he's like, it's a great opportunity. They're a great team, great people. You got to they're looking to expand. They need some more people. Call this guy. He's like, I'm telling him, he's like, it'll be a great opportunity for you. And I ended up interviewing with David. I just kept calling. I did my interview with Mark and David. I met Mike. I met the rest of the team. And I just kept being persistent about the opportunity. And I remember the guy who introduced me to David, he's like, Matt, he was telling David at the time, he goes, Matt, won't get off my lawn. He's like sleeping on my lawn. Until you give him this job, I don't know what I'm going to do with this guy. And so I ended up getting the job, but I was full transparency. The first year, I was a fish out of water. I had no experience. I was completely out of my comfort zone, which I've now embraced, and I love being outside my comfort zone on a daily basis. But Michael, I have to give Mike a lot of love here. Ever since day one, he has been one of the most supportive, helpful people on the team. When I had moments where I was like, I made the biggest mistake, I turned away 30 clients that I used to work with. I had a book of 30 clients that I handed away overnight when I made that decision that I was going to take this leap of faith with this team and with this person, David and Mark at the time. And it's just been an incredible ride now. I mean, this is now 7 years for me. So we come from different places.
Yeah. Well, congrats to you both. I mean, we love Alpha Funding. We've got to know you guys really well over the past few months, and you guys offer a great product. And that's kind of what I want to talk about now. If you were to describe Alpha Funding to people that have never heard of it, give us the overview. We know that you are hard money lenders. We know that you lend new construction, rentals, fix and flips, commercial bridge loans, multifamilies, cash out refis, just to name a few. But if you were to describe Alpha Funding the way you want people to hear it, how would you do that?
Yeah, Alpha Funding is a capital partner for real estate investors. We have a great network. We have vast resources, but ultimately we look at this as a partnership. Everyone that we work with, when they are successful, or if they have a difficult situation, if they aren't successful, it reflects on us. Like, we have an alignment of interest. We want to see that success. We're also, from our underwriting and our background, when we look at these deals, we're also there to assess risk. And Alpha Funding, we provide a lot of different options for investors, whether they're new, whether they're experienced, whether they're looking for a short-term solution, maybe a bridge, they're fixing and flipping a home, they're building a new home, maybe they want to take down a commercial property and they need a short-term financing, or if they need term financing, they need something long-term and they want to hold on to that property, build a portfolio. We can help investors across the board. And what Mike was talking about, how we were just based out of New Jersey, the fact that we now have vast resources across the country, and our capital stack, which is really a proprietary capital stack. I don't know anyone who has a capital stack that we do. We provide a lot of flexibility to our investors, a lot of options. We have an incredible team. So, that's what I think. When I think of Alpha Funding, I think of us as problem solvers and partners.
Love it. So for the layman that doesn't understand this, can you explain the difference between a hard money lender and then a private money lender? Because I think the terms are thrown out loosely here, and it just specifically for your niche, what's the difference?
Sure. So private money lenders, hard money lenders, they have like immense overlap, right? Your private money lender is your friends, your family, your friend down the street. Hey, Bob, or hey, Corey, hey, Ryan, guys, I got a great deal. Do you want to lend me some money so I can buy it, fix it, and when the project's over, I'll give you some money, right? And you guys will say yes. Maybe you do some documents, maybe you don't. Always do documents, I'll say that. And that's what private money is, right? You're going out, you're finding individuals, you're asking them to put up some money so you can do your project. Hard money lender or a lender like Alpha, right? Because hard money is kind of the word that keeps coming in and out of the vernacular. But hard money lenders, we're an institutionalized lender, right? We are an actual business, which is different than a private money lender. Private money lenders are not businesses. So we're in the business of making loans. And that's the biggest difference between a private money lender and a hard money lender. Everything we do is standardized, right? Like we have a box. You have a loan, it hits parameters, we're able to lend to you. And it's less about, hey guys, I really like you, so I think I trust you and you're going to do a deal, to, all right, you have a property, it's worth this, doing this much work, this is what's got to go on, you have this much money, let's get the deal done. That to me is the absolute biggest difference between a private money lender and a hard money lender.
That was a great explanation.
Yeah, it's perfect. I want to give a scenario here, and you tell me if this would be a great fit for you guys and your team. Let's say that I was looking for a six unit property, right? And I knew that I could get it at a certain price. I wanted to put X amount of dollars into it. You guys would come in and say, this is what I think I could lend you for the renovations of the property, and maybe just walk us through like an actual scenario of how the hard money lending process works within somebody buying, call it a 6 unit, call it an 8 unit. I just wanted to lay a little bit of a foundation there just to give people a picture. You would lend the money, the buyer of the property, the owner, the investor would then refinance and then pay you guys back with the terms allotted. Is that something along those lines?
Absolutely. So let's go back to what I was saying about the difference between private money and hard money. So it would be a systematized process. You'd have a 6 unit, let's say, and you're going to bring it to me. You're going to say, all right, I'm applying to Alpha Funding. I have a property. It's worth X amount of money. I need to do this much rehab to it. It's going to be worth this much when it's done. Go. What are we going to do? So we go through a very systematized process. You submit that information. We look up about you guys as well as the property. So we're going to do an appraisal. We do proprietary checks on the property on our back end, and we're looking at the borrowers too, right? I always say that the best loan that we can do is a marriage between an amazing property and amazing operators, because it's really easy to have amazing operators and terrible properties, and then terrible operators and amazing properties. And only one of those scenarios makes a great deal. So we're doing all of that diligence. We're going through a very systematized process to figure all those pieces out. We get to the end, we say, okay, this property's worth what you thought it was worth. All that looks good. You guys look amazing. I can lend you, let's say, 85% of the cost of the project, right? So then you guys are going to have to come up with the balance at 15% of the cost. You'd bring that to the deal, right? Plus all your closing costs. We'd lend you the purchase money. We're going to hold all of the construction in reserve, right? So now we're saying, okay, we're not giving you this money. We're going to hold this money in a big pool. You're going to start doing the work, right? And as you do the work, you're going to submit to us, be like, hey, Mike, I did $10,000 worth of work. Can I get some of my money? And we're going to release it, inspect the property, and release it as we go. The cool thing about the way hard money works is you're only going to pay interest on the dollars you have out at any given time. So that, let's say you're doing $100,000 worth of work, you don't have to pay any interest on that money until you start using it, which allows you to, in the early parts of the project, as you're getting things up and running, to not have the burden of such a high payment. But as you go and as the project nears the end, that's only then are you taking on all of that kind of burden. So that's kind of the really fast way to get from the beginning of a project to the end. And then once you finish it, we can either help you refinance into a loan that takes longer. You can sell the to sell the project, obviously, or you can go find alternative financing long-term yourselves. But the way we do it is through a very streamlined process, right? It's less about how I feel about things, less about how I feel about the borrowers, or, oh, I don't know about this property, it gives me a feeling. It's less about all those things, and it's more about facts, right? This is the property, these are the numbers, these are my borrowers, this is how it gets done. And I find a lot of comfort in that, right? Because you're taking emotion out of it. You're taking kind of that piece of like, I don't know if this project's going to do it, if it's going to make it. I don't know what they're thinking. It's in this neighborhood. It's like, no, I have facts. I have data. I have numbers. We're going to make this deal happen.
Well, that was a great explanation. So for you guys, I know you have a bunch of different types of loan packages out there, and they go into specific buckets that we'll go into in a bit. Who is your ideal client? So what's your bread and butter? When you see it, you're like, these are the guys that I'm going to work with, and we can churn these deals left and right.
I mean, our ideal client is any investor, like we were talking about before. Yes, a new investor there's some more inherent risk, but we love working with someone who's new. Ultimately, there's more hand-holding you could imagine. If somebody's new, I get those phone calls every day. Matt, this is my first deal. They always have more questions typically than the experienced investor, where it's just rinse and repeat. But having those relationships and being able to be a part of that journey from the first day, from the first moment, when they had the highest level of anxiety, when they were nervous. I know what it feels like to be in that position, because my first investment property, I did a house hack, and it was nerve-wracking. If I didn't have Mike, if I didn't have David, if I didn't have some of the resources I had around me, I would never even got into it. I would have been renting still. And that was one of the main reasons why I did it, was I didn't want to rent anymore. If I was going to pay someone, I'm going to pay myself back. And newer investors are probably ideal. A really sweet spot for us. Obviously, we work with experienced investors. We have incredible products from, the super investor who's a developer, working on the commercial side, people that are building, multiple units of new construction. But if you're somebody who has been just getting started, you have a couple deals under your belt, and you can come to us and say, listen, I have proof of concept. I've done a couple of deals here, and I've been successful. And I just want to have a capital partner that I know I can rely on so I can scale. I've been putting a lot of my money into these deals. I want to be able to leverage you guys and have that reliability. Also piggyback off of the fact that we can take a look at the deal. You know that if it's good for us, that it probably makes sense, because you guys, like Mike was saying, we're so systematized. We want to see a specific margin in every deal. We want to be at a specific guideline, LTV-wise, whatever it may be. So when you see a deal looks good to us and you want to now leverage our money so that we can maybe give you 80%, 90%, whatever the costs are for a project, I think those are basically where our sweet spots would be. The newer investor, and then the investor who's done a couple deals and is looking to scale.
Love that. That seems like you guys, when you say systematized and you have your system together, I think it's nice checks and balance, right? So for me, I'd feel comfortable if I submit something through the portal and I apply to be, a partner with you guys and essentially work with you. For you to give me the check, the A of approval, it's like, okay, my numbers work. It's a second notion of underwriting that I would feel good about. So that's important to bring out.
Look, we're like the blue check mark of real estate.
That's nice. I like that.
Before I was in this seat and as a partner, owner, and CEO of Alpha, I was the underwriter here. So like I probably looked at thousands of loan applications in the last 10 years. And I can tell you, I have talked a lot of borrowers out of doing deals, and that's to our detriment. So like, I think that's always the other thing to realize, like, we're on the same side as the borrower, because only if deals closed do we get paid. So like we don't, and I think that's important to realize, like, if you come to us with a deal and I tell you guys, I'm not going to do it, we have not transacted anything. We're not making any money off of the time we took to look at your deal. So like we are on the same side. So your success in a deal means that you're going to come back and borrow more from me. But if I say yes to a bad deal that you're going to do, all you're going to do is be like, these guys, they knew it was a bad deal, and why would they do this? So I'm on the same side of the borrowers. I want them to succeed as much as I want to succeed. And I've definitely told a lot of borrowers, listen, this deal is just not going to work, and I'm not going to do it, and I'm not going to take you down this road. And that's there is some comfort in that, knowing that someone's going to take a second look and show you or tell you about the thing that you might not have thought about.
Yep. And I also want to mention that you don't want to use alpha funding, meaning the investors. You don't want to use alpha funding as a verification process, right? Like, but that's kind of how a relationship is built, right? If there's a few deals that we bring to you, you say, I don't think about this. I don't know about this one. Okay, we go back, we get better with our numbers. We find another one. Oh, this one really works for us. That's how we know that we can trust you, that you're not just going to lend, willy-nilly money out. Willy-nilly, that's a good one. Yeah, lend money out to anybody, right? Or any type of deal.
I was just going to say to Corey, that's something that we do as a value add. We can obviously lend you money, but like what Mike was saying, there's something that's intangible that you can't, the 15 years of us doing this, Mark and David have been doing this past 15 years. Mark's been in the business for over 25 years. David, over 20 years. The fact that Mike's looked at over thousands and thousands of files. For every loan that we close, we probably look at 3 to 5x the amount of applications and real deals that we underwrite. Not even screening, underwriting. So when you were saying like sometimes coming to us, like that's something that we provide as a service and a second set of eyes. Obviously, it's great. Like if someone came to us and they said, I've done no work on this project, I just think it could be a deal. Could you guys do this for me and then also give me the money and I'll collect all the profits? Yes, that absolutely. You always want to, like, nothing makes us happier than when someone comes to us with a complete package. They've done their homework. They have a pretty good starting point. And then what Mike and Priscilla and the rest of the team, David, we can polish the edges a little bit. If we have to make micro adjustments, we can make those micro adjustments. If we can provide a suggestion or maybe some guidance, that's where really we exceed. But absolutely, but never feel hesitant to ever bring a deal to us. Like we have quotes that we offer to any one of our borrowers. It's a very competitive space that we're in. I think we offer a very unique product. The fact that we are a private money lender, but we're considered hard money because we're in the business of lending versus just being a private lender. But having that ability to be able to run deals by us, we have a front end team that will go through any deal. So if you have deals, you can always do that. But absolutely, always feel free if you guys ever have deals.
I love that.
Yep. Yeah, well, I was going to say, I've been in a lot of scenarios where I've been through a couple of real estate agents, and depending upon where we buy properties, we have different agents. But I've been in scenarios where I've been brought to their lender, the lender that they typically use, and it just didn't work out. And I know a lot of people that have just backed off, like, I guess I can't get this property, or I can't make this work. And it's really cool to find a new resource that is not a typical lender, because I think that some of the products that you offer really do diversify you guys and separate you from, just a typical quote unquote lender that's out there. And you're kind of the next layer, which I really like.
Yeah, I want to dive into that, and we'll talk through the loan packages here in a second. I just have a quick question for you guys. Do you take on short-term rental loans? And I mean that we just have a lot of people in the long-term space, but also the short-term space. People are getting into the midterm, then obviously development, etc. So I'm curious, that's the sexy word these days, right? Vacation rentals, short-term rentals. So do you guys have a scope of work within that bucket?
Yeah, absolutely. We 100% lend on short-term rentals.
Cool. That was easy.
Yeah.
All right. You heard it. Yeah, you heard it first, boys. All right. So lending programs for investors. Let's talk through these. Let's start with I know you have fix and flips, you have new construction, rental, commercial bridge, multifamily term, cash out refis, and then maybe a couple others woven in there. Let's start with the fix and flip. Can you talk to us about like what the fix and flip loan is comprised of, and like who would fit within that bucket?
Absolutely. The fix and flip is the bread and butter. That is the original type of loan that we do, and that's been done for a long time. It is literally what it says. It's a loan where you're going to buy a property, fix it up, sell it for profit, right? So it's the simplest of almost everything, because all you have to do is you have to get into the loan, and to get out of it is just a pure sale. This is really great for first timers. I know a lot of people, and we'll talk about a little bit about the BRRRR method and getting into rentals. And, I think people get really nervous when they get into the business. I've definitely been at a lot of events and talked to a lot of people who, they've sat on the sidelines, they want to do deals, but there's just so much different things. Like look at how many different programs you just read off, right? We got fix and flip, new construction, bridge, rental, commercial, like there's so much to take in. And so typically the fix and flip is good for kind of like, it's the entryway, it's the gateway into real estate investing because the risk is lower, right? You have some fixed variables. You know what you're buying it for. And for the most part, even with this uncertainty that's happening in the marketplace and with the economy, you still have a pretty good idea of what a single family house is going to be when you sell it, right? So fix and flip is a great way into that. And also it's a great way to build your war chest, right? Because it's a great way if you don't have the money to invest into long-term rentals and all that, or even short-term rentals. It's a great way to get in, cut your teeth on the construction process, understand borrowing money, and then selling these properties. And hey, I got a bag of cash now. I can go do something else with it. So, that's kind of fix and flip in a nutshell is kind of where that goes.
Perfect. Great explanation. And then I kind of want to talk about new construction loans too. We can go down the list, talk about more of them, but that one specifically piqued my interest because I honestly just candidly don't even really know how this works at all. So maybe you could shed some light on what the terms are like on a new construction loan and just kind of the process.
Absolutely. So new construction, I would call it's like the step up from your fix and flip. Even though in a lot of ways, new construction can be easier than rehabbing a house, right? Like the curveballs you get with a new construction are somewhat more limited, right? Because you're not, termites aren't going to suddenly come out of the walls and pipes aren't going to suddenly explode, hopefully. But there are more nuances when you build something brand new. You're pouring foundations, you're digging, you're bringing in utilities, like all these things that when you go into a rehab, you don't think about because it's all there for you already. So typically with new construction, we look for somebody with a little bit more experience, whether it's extensive flip experience, they've done a lot of stuff, they've seen a lot of stuff, they have a good understanding, or people who have done new construction in the past. But, right now, if you look at kind of what's going on in the economy, new home sales, so new construction home sales is what's on the rise. Because what we have right now is an unfortunate situation where I think they're calling it golden handcuffs, right? People have bought bought their houses or refied, trapped into a really low rate, and they don't want to leave their house. Like, why would you? So new construction, as we look at the metrics, that's what's on the rise right now over the last several months. So the easier part is because you're starting with a blank canvas, so everything just kind of moves forward. The complicated part is just the nuanced pieces. But it's interesting. We see a lot of new construction happen in different ways, whether it's somebody just buying land, right? That seems like the most obvious way to do it. But a lot of people also buy houses, knock them down, and start all over again, right? So new construction can happen multiple ways. So, it's not just one thing, but there's a lot of ways to kind of come at that.
Can you give me an example of of how terms would work on new construction? Is there a certain percentage that you typically say that you want people to put down? Maybe it varies too much to even speak to it, but I don't know if you have an example of how that works.
It's actually, it doesn't vary that much, right? Because it's a systematized process. So typically we look for a little less leverage on new construction, right? Just because there's more construction risk in it. So you're typically looking at somewhere around 80 loan to total project cost. They're looking for borrowers to really come in with that 20% of total costs into the deal. Terms are anywhere from 12 to 18 months. I know everybody believes they can build houses really fast, but most of our new construction goes over 12 months. It takes a lot. It takes a lot to build a new house. And that also depends on geography, right? So it takes longer to build a new construction house in the Northeast than it does in Texas, right? It's nice almost 365 of the days of the year in Texas. It is not nice 365 days of the year in Pennsylvania or New Jersey or New York. So a lot of those things factor into those pieces, right? Like, you can build a house in Arizona and those, your guys can come work 5 days a week, 6 days a week, right? Which might not be the case in all geographies. So that's one thing to look at, but typically that 80% LTC, typically it's a little more expensive to do a new construction to borrow, right? Because again, more risks. So there's more charge there. And like I said, that 12 to 18 month kind of term.
Cool. Very cool. I think we have a lot of investors or aspiring investors that are trying to get into rentals, whether that's short term or long term, or even midterm. That's a new one that everybody's kind of getting into these days. Can you talk to the types of rental programs you guys have?
I'm going to give that to Matt because he loves talking about Burr. It's like one of his favorite things.
The Burr strategy. Okay.
Love it.
Whether it's short term, midterm, or long term, we have a product for all three methods. The biggest thing about us is we have a non-QM product. So sometimes when you hear the word non-QM, you're like, what's non-QM? Qualifying mortgage is what QM stands for. So it's a non-traditional loan. If you were to get a loan for a rental property, you want to own, like I got an FHA loan for my property. And technically there's a whole nuance to that. I technically was living in one of the units and I did a very low down payment, but not to digress, but to talk about our non-QM products, they are based off of the success, the performance of the asset itself, which is the rental property. So whether you're using that property to rent it out short-term for Airbnb, Verbos, any kind of short-term vacation rental, if you're looking to do maybe short, you said midterm leases or an annual lease, you're gonna have a tenant in 12 months out of the year, we can lend based off of those rents when you look at that against what your principal and interest, taxes, and insurance would be. So as long as it's positively cash flowing, we can give you a loan, and we have different products for it. Every loan is going to be a 30-year term loan. Now, do many investors stay in the loan for 30 years? Statistically, we have seen that most people will exit the loan. They'll either refinance, they'll sell it within 8 to 10 years. So usually 8 to 9 years is the maturity. But you have the option with different prepayment penalties, with different, we have an interest-only option. Like right now, that's something that's very popular. You're saying instead of, to make the DSCR work, because rates have gone up, so to kind of counteract the rates going up, what your cost would be for your principal and interest, you can kind of counteract that by only paying interest and deferring the principal and doing an interest-only option. You just do the interest, taxes, and insurance. It's a little bit of a lower payment. And what happens is, I think it's fair to say, Mike, myself, you guys are all in the space. We've all been in the space for a pretty good time now. Real estate appreciates consistently over time. Right now, we're in a little bit of a transition period, but still, over time, it's a pretty good bet that the property is going to appreciate in value. And hopefully, if the rates do come down a little bit and you decide to refinance, what you can do is you can just take that deferred principal payment and refinance that later on. But the rental program itself, some awesome options. Typically, we're only about 100, maybe 150 basis points above what a normal traditional loan is. Now, what's the big difference? And I'm going to answer my own question. What's the big difference between going traditional versus going with us? Well, one, you can do it in an LLC. You don't have to have that liability, whether it's tax, whether it's legal, whether it's just attached to your name. You can do it in an LLC for all those purposes. You can also not have it show up on your credit report because it's in your LLC. It's not going to show up so with your DTI on your personal credit. And you don't need to show income. It's based off of the performance of the property. So if the debt services based on the rents, we can give you a loan within about 3 or 4 weeks. We can move quickly. Like we have a team in-house. If you have a deal, you want to refi, whether you want to pull cash out or you just want to refi, maybe you just want to buy a rental property. You don't need to do the Burr method. You just want to purchase it. Whether it's a 1, 2, 3, 4 unit, we could even do over 4. So we do commercial multifamily and actually in some cases, some mixed use. You can purchase it right away and we go up to 80% in some cases with the LTV. So it's a very powerful product and it's grown in popularity over the last couple of years. And we're proud to obviously offer that to our investors in addition to what Mike was talking about, our bread and butter, which is the fix and flip new construction.
That's pretty great information and also an incredible package. So you're saying when you purchase through an LLC, it doesn't affect your DTI. So basically you're not doing like on your hard, for example, Corey and I come in, say we have, I don't know, our loan or debt to income ratio isn't what we could get in a traditional long term. That people will be like, oh, no, not, you have to wait till this changes up and you pay down more of your debt, right? We come to you guys, we purchase it within an LLC. You guys are going strictly based off the numbers of the property, if that works, not based on our background.
Well, again, it's that 2 pieces, right? We're looking to make sure you guys are credit-worthy borrowers, but what we're doing is not going to show up on your credit. So it's not going to affect if you bought a a rental and you got a rental loan from Alpha and you went to go buy a house, you would not have any issue. It's not going to show up. But we are still like I said at the beginning, good borrowers, great deals, that package is what you need. So we're still looking at those pieces, but it's just not affecting your personal debt to income.
That's powerful though.
Yeah, it's huge. It's a way to scale your portfolio based on the income that's coming in, as opposed to messing up your own DTI and then not being able to qualify for further loans. So I love it. It's awesome. I am curious. I know we can talk about some more loan packages. I don't know if you want to go that route.
Yeah, well, let's talk. We'll just do the last two, multifamily term, and then we can go into the cash out refi, and then we can touch base with whatever you want to do.
Yeah, cool.
Yeah, I think both of these, though, are actually very similar to the rental, right? Like they're just different. They're just like different flavors of the same thing. Your multifamily term is you're looking at stuff that's your 5, 6, 10 unit type thing. Same pieces apply, right? You're still looking at DSCR. You're still looking at all those pieces. What are the cash flow of the property? All those pieces. We're just looking at it now on a bigger scale, right? And when you look at it on a bigger scale, the number one thing to always remember, experience comes with it, right? If all you have to your name is one single family rental, an 11 unit building might not be the easiest thing to get done, right? Like that's one of those pieces, and that's just an experience piece. Cash out refinance, again, just another flavor of the same thing. You already own a rental, you already have that, and like Matt said, you're on the appreciation train, and you want to take cash out of it. It's the similar process. We're looking at the same variables, we're looking at the same pieces. At the end of the day, what you really end up having is there's really just 3 types of loans in general. You have that fix and flip and new construction go together, just another flavor kind of the construction loan. And then you have the rentals and the multifamily term, the cash out refinance, 2 more flavors of the rental. And same with commercial bridge, right? That's just the last part. That's just, I'm at A and I need to get to B and I'm doing nothing in between, right? There's nothing happening in the middle. I just need some money to get from here to there and I'm going to pay you back. So, but cash out refinances, we saw a lot of those during COVID as people were riding a crazy, crazy appreciation train, and where you can get sometimes 75, 80% loan to value of what you have. Again, you now own all these rentals. At some point, you want those properties to work for you, right? You're buying them. It's not just about cash flow. It is. That is an amazing thing if you have a portfolio of cash flowing properties. But you want to keep buying. You want to keep growing your empire of cash flowing properties. And these properties are what's going to help you do it, because 4 or 5 years from now, as you're on the appreciation train, you do that cash out refi, you take money out, you start buying more rentals, right? You want to put yourself in that position with these tools, because they are tools at the end of the day, right? It's screwdriver, hammer, whatever you want to call it. You want to put yourself in that cycle of recycling your own money to make yourself more money, right? So it's like an old joke, right? When you have the money, you just you breed money with your own money, right? Like you grow your own money tree. And that's what this is.
Yep.
Once you have the properties, you can go into a cycle of just using your own money to make yourself wealthier.
Yeah, that's the key. It's kind of becoming your own, almost, obviously leveraging you guys, but it's kind of becoming your own bank in a way too, and just recycling. Yeah. That's the formula, right, for generational wealth. So
Absolutely.
There's a lot of lenders out in the market, right? Or just in the United States in general. I'm curious to how you guys see yourself as, I guess, your competitive advantage. Like, what separates you from other lenders, and why should our investors and our friends come to you guys or to us together as a partner, right? What would be the reason that they would come to you guys versus someone else?
I think it's really easy to get caught up in what we do and look at us as, oh, you're a bank, you're this. We're in a service industry. And I think that to me is like the first step and the first approach you have to see it. The tools, the programs, all those things, everybody has a program. Every lender they have money to lend, right? It's, right now there's no shortage of money, it's out there. But we are a service provider, right? And we talked about a little bit before about how we look at deals. We're not a company of 100 people. We are 10 people, right? And I have no plans of ever being a 200 person company, because the service we give borrowers, that one-on-one, knowing who they're going to talk to at our company, being able to pick up the phone and say, I want to get a hold of the CEO, or I want to get a hold of Matt, or I want to call the underwriter who I've done my last 5 deals with, and I have a question I need to ask, or, I'm going to shoot an email over and I know who's going to respond to me and not just some faceless, no reply on Alpha Funding, right? Like we don't want that. So our advantage is that we've been doing this, number one, a really long time. We've been doing it since before it was in fashion, right? Before everybody decided they wanted to be hard money lenders. And why is that important? Because we understand that the customer service and the service we provide our clients is almost more important than the programs, right? Everybody nowadays, it's become so homogenized. Everybody's going to come to almost the same place, right? As far as rates and points, maybe there's little variations here and there, but it's all about streamlining the process, providing the best service possible to the borrowers, and giving them that touch, giving them that comfort, like Matt said, about being a capital partner, not a capital source. To me, those are different things. A capital source is you're going to put your information into a website and a computer is going to tell you what you can borrow, right? And then you're never going to speak to anybody and you're going to get a loan. And when you have a problem, you're going to fight with a computer to get there. Not that we don't have digital tools and we've streamlined our process. There's a human being behind the scenes at every stage of what we do, and they are available to our borrowers. So the biggest thing I think for us is that customer service. We are service providers instead of product providers. I think that to me is the biggest difference.
Love it.
Well said.
Matt, do you have anything to add? I don't know how you possibly could.
Oh, no, he kind of like did one of those drop the mic things. So
Yeah. Okay.
literally, pun intended, I guess.
Yeah, Mike.
Oh, that was nice. That was nice. Actually.
I have a question for you guys as we kind of wind down the show here, and I want your take on this, knowing that you've been doing this for upwards of 15 years. What do you think? Nobody knows, right? Nobody can claim to really know. I'm curious about your take on the market now. I have my opinions, but my opinions are about as valid as nothing. So I'm curious what you think's going on. As you take more towards real estate, but also lending in general. What do you see as the next 1, 3, 5 year outlook, and how are you positioning yourselves to take advantage of it?
So I don't think any of us have that crystal ball, right? David, one of our partners, he always uses this line: if I had a crystal ball and I could tell you exactly what was going to happen, he'd be in an island somewhere on a boat doing whatever he wants to do. He'd have all the money in the world. But we all don't. But what we do, and I think we do it really well, is we read the tea leaves, we read data, we're very objective. We try not to get emotionally involved in decisions. What I've seen at the macro level all the way down to the micro level is when you look at our country right now, we are in a historic inventory shortage. And it's going to be a while. You said 1 year, 3 year, 5 year. This is going to be something that we're going to be talking about after the next election. So not this election, but next election, we're still probably going to be talking about a housing inventory crisis where there's just too much demand for the supply that's available. And that's where Mike was talking about how new construction is so abundant right now. We're seeing it in Florida, in the Southeast market, in Georgia, in the Carolinas. We're seeing it in California, in Texas. Texas has been booming the last couple of years. In the Northeast, there's been so much building going on. What I've seen that's a big difference from where we were in 2008, 2009 was if you looked at absorption rates in where we were at the last housing crisis, absorption rates were almost 2x, 2.5x where we are now. Where houses, we're probably around an national average, around 3 in the absorption rate. We were at the 8 to 9. There was an incredible amount of supply that flooded the market, and it drove prices down. Now, I'm not talking about from a macro level. To get to the micro, you have to go into some of these sub-markets. Every market is acting a little differently. There are some markets that have been growing at incredible clips over year the last couple of years. Like Mike was talking about that appreciation train. There's some markets that grew 10%, 15%, 20% year over year. And now what you're seeing is a little bit of a cool down on that. Specifically with us, we're based in the Northeast. There's just so much demand for housing. You can't get enough. If you buy a house and you can renovate a really good product, put it on the market, 30 days later, that thing's going to sell. Like absorption rates are 1, 2, maybe 3 at max. There's very few pockets where it's higher than 3, and that's national. So I think the next 3 to 5 years, you're going to see a lot of opportunity. Mike and I on our podcast, quick shameless plug, we were talking about foreclosures, and although that's a whole nother thing to unwrap, foreclosures are going to become more and more, I think, they're going to appear more in the market. And although, we have been seeing, we got some data, we work with some people in the space, and, there's a difference between the tax foreclosures and the mortgage foreclosures, but I think that there's just going to be some more opportunity, and I think rates are going to stabilize. I think we're in a healthy point right now. Obviously, inflation has to be tamed a little bit, but I think we'll get to a point where interest rates will settle. I just don't see us ever getting back to that 2-3%. I think that would be a long time, or if ever, us getting back to low levels with the interest rates.
I think that was a great explanation, Matt. And I saw a chart today on an Instagram account that we follow that was saying, everyone's talking about a housing big time correction or crash. Everyone thinks that they know what's going on, right? And I'll be the first to tell you that I don't. But what I did see is that you have to regionalize this whole thing. There's no such thing. I know people that in 2008 didn't even know that the market crashed based on where they were. And that might have been, Missouri, right? But I'm saying, I saw a chart today that said that I think it was 6 months, it could be a year, that San Francisco, Sacramento, some California markets were down 10, 11, 12%. New York was down 9 to 12%. Florida up still during this whole thing, 10 to 12%. Texas up. Think about the migration patterns and where people are moving to. That all plays a factor. It's not just what is the wholesale macro economy doing to the housing market. I think that if you're buying a good product in a good area where people are coming to, real estate's not going to win in the micro every single time, month to month to month, but I'll bet on it all day if it's a long-term project. So I liked your explanation there.
Yeah, so that's great.
So the one thing I'll say to that, if I can jump in and I'll give my 2 cents, is a couple things, right? Everything is very regionalized, and you have to look back at the pandemic to see what happened. Even though rates were really low, borrowers who were buying regular houses put up incredible amounts of money to buy, right? You weren't getting your 5% down FHA loans. Those weren't happening during the pandemic. The supply was so low that people were putting 50%, down, 60% down, coming crazy cash offers. So a crash crisis, there might be, I guess, a quote unquote crash. It's happening, as you mentioned, in California. I actually think the numbers are as high in some places as 21 or 22% correction already.
Totally.
But that's going to be very regionalized, and the crisis isn't really going to be there like it was in 2007, 8, or 9, when you were looking at banks making bad loans. That's not what happened here. Banks made great loans, and as a homeowner borrower, unless it corrects truthfully more than 20%, right, which is your, that's the stable, you're still not going to be underwater. And a lot of these people, even if it corrects 30%, they have so much equity in these properties, they're still not going to be underwater. So there might be a crash, but I don't think there's going to be a crisis, right? I don't think anybody's going to sell a house and be like, I have to pay money to sell my house. That I don't think we're ever going to see again. Go ahead, Matt.
No, I was just going to say, I think exactly to your point, what you just said, I think precisely what you see happen is you see this cooling, right? Everything was so hot. The real estate market was so hot. I think what you see is just, it slows up a little bit. Are you going to see most people refinancing their house, like Mike was talking about with the golden handcuffs? No, they have such great rates. I was with my brother this weekend. He's in the 2s. He's not refinancing. My brother bought a house out in Arizona, an Airbnb property. He's not refinancing. There's a lot of people, the golden age of refis has come and passed. What you are going to see is, as people get these 8, 9, 10% rates, they're going to then, as rates come down, they're going to catch that wave, and then they'll refinance. But those are going to be not at the level that we saw over the last 5 to 10 years, but also there's not as much inventory. So if there's not as much inventory, so there's only so many homes that can be bought, or people are only going to sell a certain amount of homes. There's just not a lot out there. So what I've been seeing in the Northeast is, in our local markets, maybe a 5%. It's going to come back. You're seeing it with appraisals now as we look at them, maybe 10%. Who knows? I could be completely wrong. In a year or two, things could be completely different. Rates could be 10 plus. But I think when you look at all the macro stuff and the micro stuff, I think we'll just see things cooling down a little bit.
By the way, I think it should cool down. I don't think
Oh,
I don't think there's any reason that any real estate investor who's savvy and knows what they're doing would want their property to appreciate 25% in a year. Yes, in theory, you would want it to happen, but in the reality, you know that this is going to level itself out. If you look at a 112-year time frame, real estate has just outpaced inflation barely, right? It should be that. It should be something that outpaces inflation to make people wealthy, not something that now nobody can afford to buy because of the increase in so much value. So I think that the cooling is a good thing.
So 2 things for me here before we wind down the show. You guys mentioned a lot of different regional markets. Can you remind us again where you currently lend?
Yeah, so we lend nationwide. There's only maybe a handful of states, North Dakota, South Dakota, Minnesota, Wyoming, Vermont, that we. So if you're in most markets, if you're at a metropolitan market, give us a call, whether it's short-term or long-term. We have options for you.
Perfect. And then last one for me is, it's more of kind of a comment, but for you guys, you mentioned we're in a service-based industry, right? You guys like hand-holding and building a relationship and partnerships with people, which I love, right? Like I work in hospitality myself. And so it runs the world. It really does. And people need that non-robotic human interaction, right? And so what I think is cool for when people come to you guys, can you talk to the other resources that you have available too? It's more like a one-stop shop. You're not just a lender. We can talk about, you have appraisers, you have agents, you have title, you have everyone in your network that you could potentially connect someone with if they needed to, which I absolutely love. I probably missed a couple in there too, but I view you guys as a one-stop shop, and it's an easy access for an investor that wants to come in and get funding, but also other resources.
Yeah, what you just said was spot on. I mean, I don't know if I can say it better than you did, but the fact that when you've been doing it for so long and when you do it the right way, the one thing that I take so much pride in is our reputation, how people view us. When I see the reviews come in, when I see a borrower that we've done work with for the last 10 years and they just keep telling, it's like when you go to a restaurant and you have that awesome meal and they make you feel really good when you walk in. And then you go home and you're feeling great. You're sitting on the couch, whatever you're doing, and you tell your friend, "Oh, I just went to this restaurant. You got to go there." We get those calls every day. But with being in business for so long and having all these relationships, we've met and we've come across so many different things. We can offer you, like people ask us sometimes about, if I don't have enough money for my down payment, like, do you guys know people that could potentially help me and, kind of close that gap? Or you have an attorney. I don't feel comfortable, I'm a little bit worried. We don't feel comfortable answering a question that's outside of our purview, our expertise. We will, in any market, we have built so many relationships, and absolutely those resources, that's where it's not just the lending stuff, it's connecting people. And sometimes we're not the best fit. Mike and I, Priscilla, David, the team, sometimes we're not the best fit. And what we'll do is we'll best redirect, guide you to maybe there's a better resource available. And I think that's where a lot of people, we're not just trying to get that one loan. I want to build a long-term relationship with the people that we work with. And like Mike said, we may be a small shop, but we enjoy that. When I see some of these investors that write reviews about us and they say, Priscilla, every time I needed her, she was there for me. The execution. And I needed to close on that deal within that certain period of time, whether it was a week, 2 weeks, they were there to execute for me. I know that they're always going to be there. We're comfortable not being the biggest lender, but we want to make sure that we have awesome relationships. And obviously, what comes with that is obviously the resources as well.
Love it. Well, first of all, Matt and Mike, that was really great explanation. It was really informative, and I just like you guys too. So, but if people enjoyed the show, they want to learn more about you, what's the best way for people to get in touch with you?
Well, one of the first things you can do is Mike and I just recently launched our new podcast. So if you're on any of the podcast platforms, Apple, Spotify, Google, we have YouTube. We also have a YouTube channel. You can just look up Alpha Funding. We have a YouTube channel, subscribe. The podcast is there in video format, but you can also listen to us at all the different podcast platforms. You can go on our website. It's www.alphafunding.com. And
It's the Mike and Matt Show. It's really original. Our title is the most original title you'll ever have. It's the
Mike and Matt Show.
Mike and Matt Show.
Rolls off the tongue.
Yeah, but obviously the website, alphafunding.com, Instagram, Facebook, wherever you want to find us, we'll be there.
Cool. And your handle for Instagram is alpha_funding. And
Correct.
We'll make sure to point people towards you. And guys, thank you so much. I mean, we've already had a relationship with you guys for a long time now, but you're doing big things in the space. You have an incredible network, and we're just excited to be on the journey with you. And I think you're going to provide a lot of value to investors in our network. And I'm just excited to see the partnerships grow. So thanks again for coming on.
Thanks so much for having us. This is great.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.